Hey everyone, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart to get a read on the overall market environment, besides just a regular chart of the S&P, what would it be and why? So here's my one chart for today. It's actually a daily chart of the gold ETF, GLD, going back for the last 2 years. Now, gold is a really interesting chart because people tend to think of it as a safe haven, but it's not necessarily been playing out as such in recent weeks and months. So what had happened with gold leading up to the market sell-off that we just experienced is you had this repetitive pattern. Starting in the third, fourth quarter of 2018, you had this rally into a peak in February of 2019. Gold pulled back about 38.2% of the way. It broke above trendline resistance, broke to new highs, and then accelerated into what's called a bearish divergence. This is where you have higher highs in price, lower peaks in the RSI. That bearish divergence was invalidated in August of 2019 when it broke to new highs again, and the RSI broke above that trendline resistance. That same series of steps happened all over again in the second half of 2019. You had the big rally, the pullback around 38.2% of the way, the breakout above trendline resistance, the break to new highs, and again, a bearish divergence with higher highs in price and lower peaks in the RSI. Once again, that was invalidated when gold went to new highs in mid-February. The RSI broke out again. What's happened since then, though, is where things have become a little strange. So normally you would expect if the market's really rupturing, you would think a safe haven, quote unquote, like gold would do much better, but it's not really been the case here. So most assets, gold actually went up toward the end of February, beginning of March. First week of March was actually pretty good. As stocks were aggressively selling off, gold actually held up. But then gold, along with pretty much everything other than the US dollar, started rolling over. Now we have the situation where things are starting to stabilize a bit. And three things that stand out to me looking at the chart of gold right now. Number one, gold has broken down through a 200-day moving average. So the last time it was below its 200-day was back here in December of 2018. It's been above this entire stretch. It's once again broken below. Now, what we have not seen is a real confirmation day, a real follow through to the downside. So step one is it's broken down through the 200-day. That's the initial warning signal. Step two is my second point, which is the fact that we have found support. So back here in November and December of last year, gold found support around 136.50. That was the low here a couple times. We've retested that low. So the day that we actually broke down through the 200-day and actually closed back above, we found support right around in that 136.50 level. So the line in the sand, in my opinion, for gold, now that we've broken down through the 200-day, is that 136.50 level, that range. And if we would break that, it opens the way down to 130, which is the upper end of this gap from last summer. Also is the next Fibonacci support level. So that would be the first downside objective, in my opinion. What's potentially arguably going to prevent that, or at least pause it, is the fact that the RSI just touched the oversold level. And this is point number three. As you can see, the RSI had actually been in the bull market range, not really getting near the oversold level since last August of 2018, actually, right? So it had been in a bearish mode, ranging between around 40 up to around 80 pretty consistently. That actually has changed. Now the RSI is more in the bearish mode where it's below, getting down to the oversold region. But the fact that gold GLD has been oversold usually suggests a bit of an upside reversal. So I wouldn't be surprised if we continue to see a nice bounce off of that Fibonacci support level, that price support level around 136.50. Again, if we break that, I think that's the signal that we can go to 130, if not lower. My final point looking at the chart and why this is such an important chart right now is the relative strength. So even with the choppiness, even with the pullback, the downturn that we've seen in the GLD, it has still outperformed most assets in the last 6 weeks and has outperformed the S&P 500 in the last month by over 30% on a relative basis. So ladies and gentlemen, that is my one chart for today. If this sort of thinking about investment process, decision-making, and behavior is of interest to you, I hope you'll hit subscribe, leave me a comment, let me know what other videos, what other charts you'd like me to review. And don't forget to check out the other videos on my Market Misbehavior channel. Be safe, take care, thank you.